All right, today I'm going to talk about how tax brackets work and just give you a general example of how this works in the real world. So the example I'm going to give is $80,000 and a single person. So from a federal perspective, here's all your tax rates and then the ranges for each. And the easiest way to think about this is basically for every dollar you earn from 0 to 11,925, you're going to be taxed at 10%. A lot of people sometimes think like, oh, I made it up into this tax bracket of 37%, so everything's going to be at 37%, and that's just not the case. So in this example, we earned $80,000, so this full amount, $11,925, is going to be taxed at 10%, so that's $1,192.50. And then also, since we made $80,000, 12% rate, $11,000 to $48,000. The difference there is $36,550. So you're taking $36,550 times 12%. That gets you $4,386. So within this tax bracket, we're between $48,476 and $103,350. So that difference is $31,525 of the amount we're going to be taxes for. So 22%, $31,000. That equals $6,925.50. So that their total tax bill is $12,514. This is not taking into account your 401k, IRA, healthcare, all these other things you might be paying for. This is general rule of thumb, just how these brackets work from a math perspective. So two things to keep in mind, and this is kind of what I alluded to earlier. Sometimes people get into these higher brackets and they're like, oh, my entire tax bill is at 37%. That's just not the case. The marginal rate, 22%, that's the highest rate we got to for making $80,000. It's the highest tax bracket. And then the effective rate is taking the 10, 12, 22, adding them all up, dividing, and so you're getting an average rate of 15.6. And at a state level, they work very much the same way. Not every state has taxes, so this may not apply to you, but from a general rule of thumb, this is how it works. Other tip here is reducing taxable income, so lowering your AGI or adjusted gross income. That is something you'll hear quite a bit. So options here, 401k, IRA, HSA, these are things like I was mentioning, it may not work out exactly like this depending on what else you're putting your money towards. So if you have a 401k, you're putting that money in, or an IRA, some of these options are tax deductible, so it's going to reduce your taxable income. And so instead of you make $80,000, sure you did, but maybe you put $23,000 towards your 401k, which reduces this number quite a bit. So just some general rules and tips. If you found this video helpful, please like and subscribe. It really helps the channel. Thank you.